This is the Euro Yen on the 15 minute and I'm involved in a breakout pattern. This is a pendant and I'm going to talk you through the rules that I use to get involved with this trade and the extra confirmation that I've now had on this particular pattern. Now I've only got just shy of a 1-to-1 reward to risk, just a little bit less, but this is a high probability trade with excellent stop placement, so I'm going to talk through why I've gone and taken the trade. So to do that we must go and do our higher time frame analysis. Now for these breakout patterns, they tend to happen when we see a rally, and we tend to see it when the market's moving structurally, or we've just violated some form of structure. And I'll talk through this just here. So we had a move lower, I pull back, another move lower, I pull back, another move lower, and what we've just then seen is an internal AB equals CD pattern like this. And it's coming in at around the tops of these wicks. Now here's the thing, I would never trade on the dailies, and technically here we have not violated the outside return and we've got an AB equals CD pattern. However, there's no RSI confirmation for me, and it's not something that I can take on the dailies. If we do drop down the time frame though, and we can take a look that actually here, let me do that again, right here we have violated this outside return, so an indication here that we could be going higher. And if I put a structure level on just here, we have actually passed that psychological number by 7 pips, which as per my rules is enough. And second of all, the next structure level is up here as a minimum, so there is room to go higher. So let's drop down another time frame and going down to the 60 minute. Well, we have a couple of things here. I'm just going to delete this information off. I'm going to draw this out. So we had a move higher. You can see we had a little breakout pattern here. And then from this point, boom, a big move higher here. For this pendant of this triangle, whatever you wish to call it, we have 1, 2, 3, and this was the 4th area down here. Now for me personally, this run here is not good enough. When we start looking at legs for breakout patterns, we typically see a clear run like this, and as you can see, a lovely clear run, small breakout pattern, and boom, rally to hit targets. We've got a lot of reds in here when I would prefer to see more greens. So for me personally, it's a little bit too much of a risk to use that leg. So what I'm going to do is drop down the time frame and see, is the trade still valid on the 15 minute? Now if it is, then I'm going to be using this leg, and you can see that this leg right here is more directional. And do we still have the same, let me just do this correctly, just there. Do we still have the same touches? 1, 2, 3, and down here makes 4. The key thing is here, look at what we've done. And again, within the educational material, I do talk about this a lot. Look out for those confirmed double bottoms and double tops. Right here, it was confirmed because we had a break above close above the previous candles, and so this was a confirmed double top and an excellent place to get stops below. So just before I bring back on the orders, let's throw a fib on here from the swing high to the swing low. We're going to be looking for that 127. Going to bring back on the orders like so. A little bit late, could have maybe got a slightly better entry, but stops just going ATR below this double bottom, giving me a very safe place to put stops. Front running by a couple of pips up to that target. If we look left, I can't look it left enough, but nevertheless, again we've had a breakout pattern before, followed by another breakout pattern, confirmed double bottom, excellent place to put stops. Now you could technically wait for a pullback for a 26.18. It is my experience, because these are breakout patterns, that we typically do not pull back for a 26.18. If you don't know what one of those is, it is within the educational material. Other than that, I would enter this trade even though it's just short of a 1-to-1 reward to risk, and I'll show you by how much. It's 42. It's a little bit more than what I thought it was. 41, and we're looking for a reward up here of 38, so just under a 1-to-1. But does that really matter by a few pips if it's a very high probability trade? Now, we've already had one breakout pattern. We've violated structure on the 240 but not the dailies. We've had a confirmed double bottom in this already high probability triangle or pennant, whatever you wish to call it. The name is really irrelevant as long as you know how the pattern forms, why it forms and how it works. The fact is that this is a very high probability trade with an excellent place for stop placement, and I'm very happy to take just shy of a 1-to-1 on this particular trade. So we'll come back closer to those targets, or even better, to see those targets being hit. Welcome back everybody to the Euro Yen trade, and what a treat. No trades for months and months, and 2 on the same day and 2 winners on the same day. The euro pound hit for 74 and this just hit for 37. Very nice. So just going to recap here this pennant pattern. It is a pennant, not really a triangle, and the reason why really this was a pennant for me and how I got involved in a safe way. So a little bit of repeating going on here. So what actually happened was we had this double bottom down here, which was then confirmed as we broke to the upside. This for me, when we see double bottoms and double tops, or even rarely, but we do see them head and shoulders, when we have those rotation patterns which happen time and time again within channels, it is the confirmation I need that yes, this is going to be a pennant pattern. And true to my word, right up here to hit that 127. Of course we front run, and it does make a lovely second winner in a row for a beautiful 37 pips.